Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to another enlightening episode of Tax Smarts Unlocked. I'm your host, David Robson, and today we're diving into a topic that often flies under the radar but can have a massive impact on small business owners: state and local tax issues. Taxes in themselves can be daunting, but adding the complexities of varying state and local regulations can feel like trying to solve a Rubik's Cube blindfolded. Our goal today is to take off that blindfold and equip you with the knowledge needed to navigate these challenges effectively. So, whether you're a seasoned business owner or just starting out, understanding these nuances is pivotal, not just for compliance, but for your financial health too. Let's start by establishing a baseline understanding of state and local tax obligations for small businesses. Unlike federal taxes, which are uniform across the country, state and local taxes can vary significantly depending on where your business is located. This can cover a broad array of categories like income tax, sales tax, and property tax. Each of these has its own set of rules and regulations that can impact your business differently depending on your geographical location. Understanding these can help in minimizing your tax liability and also avoiding penalties for non-compliance. To be proactive in this area means more than just listening to advice. It's about making informed choices based on where you operate. It's crucial to understand that the tax landscape is not a one-size-fits-all scenario. For every different jurisdiction your business operates in, there could be different tax obligations. Some states don't have a state income tax, while others might have higher business taxes but offer various incentives that can benefit your business. For example, states like Texas and Florida don't have a personal state income tax, which can influence both your business operations and your personal financial strategy. Knowing the specifics of where you reside can lead to significant savings and better business planning. Let's unpack the various state taxes that business owners need to consider. First up is state income tax, which is typically a percentage of your business's net income and can vary widely. Some states have a flat tax rate, while others might have progressive tax rates based on income thresholds. Then, there is the sales tax consideration, probably one of the most complicated components of state taxation. Each state has its own rules about what qualifies as a taxable sale. For example, tangible goods usually are taxable, but the taxability of services can be a grayer area depending on where you are. Property tax is another animal altogether. This tax is generally levied by local governments and is based on the assessed value of your property. For small business owners with substantial real estate investments or those who operate out of owned premises rather than rented, understanding local property tax considerations is crucial. This includes the assessment process and knowing your rights when it comes to appeals, if the assessment value seems unreasonably high, for instance. Being proactive here can lead to significant savings and better financial planning for your business. To make this more concrete, let's delve into a few real-life examples. Consider a small retail business owner who didn't realize they needed to collect state sales tax because they were operating online. After a dreaded audit, they faced not just back taxes, but steep penalties and interest that could have been avoided with proper guidance and understanding of their obligations. On the flip side, I've seen strategic planning save businesses substantial sums. Another client, leveraging available tax credits and incentives at the state level, was able to offset their high property taxes significantly, allowing them to reinvest that money back into their business. Speaking of sales tax, let's talk specifics. Who needs to collect sales tax? Typically, if you're selling tangible personal property, you're required to collect sales tax from customers and remit it to the state. However, exemptions exist and they vary by state, so familiarity with your local tax exemptions can save you money and hassle. Also, knowing how to file and report these taxes correctly is crucial. Misfiling can result in fines or audits, neither of which are pleasant to deal with. Now, about those tax credits and incentives we touched on earlier. Many states offer various credits and incentives designed to encourage specific activities, like job creation, green energy use, or research and development. Small businesses can often benefit greatly from these if they're aware of them and know how to apply. It's worth taking the time to research or consult with a professional on what your state offers because these savings can materially impact your bottom line. One practical tip is to stay organized with your state tax filings. This involves keeping meticulous records of sales, income, and payment deadlines. Many states have resources and tools you can use for this purpose. Additionally, consider implementing tax software that can automatically compute tax liabilities across different jurisdictions. This simplifies the process and reduces the risk of human error. Let's not underestimate the value a professional tax preparer can bring to the table. A seasoned professional not only helps you file your taxes accurately, but can also provide insights into tax-saving strategies that you might not be aware of. This is especially true when it comes to understanding and applying for the various credits and incentives available at the state and local levels. Their expertise becomes an investment in your business, potentially saving you more in taxes than their fees would cost. Lastly, proactive tax planning is your best defense against tax surprises. Take the time to review your business structure, evaluate available deductions, and plan for any major expenditures long before the end of the fiscal year. Building a relationship with a tax professional who understands your business and its needs can provide you with the guidance necessary to reduce your overall tax liability effectively. As we wrap up our discussion today on Tax Smarts Unlocked, remember that while state and local taxes can be complex, they're manageable with the right approach and resources. Clarity and understanding in this area can transform your tax experience from something stressful to a strategic component of your business planning. From grasping jurisdiction-specific obligations to leveraging state incentives and credits, each step you take in proactive tax management simplifies what can be complex and ultimately reduces your tax burden. Thank you for tuning in. If you found value in today's episode, please subscribe and share it with fellow business owners who might benefit. Remember, tax smarts are just a podcast away. Until next time, keep your books clean and your planning proactive.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.